Hi everyone, my name is Rashid. Today is the 11th of June 2023 and I'll be giving my weekly prediction for SPY for the week ending 16th of June 2023. As usual, we'll go over the monthly, weekly, and finally the daily charts, and then go over the Excel file with all of the project data, trades taken, and capital gain or capital loss. But before getting into the video, it's important to make the disclaimer that all information presented in this video is completely for educational purposes, and markets are subject to hefty risk, and taking uninformed positions can result in serious losses. Due to this, it's highly advised to consult a financial advisor before taking a position in the market, since it can avoid unnecessary losses. Now that we've gone over the disclaimer, we can now go over the video and we can start it. So as usual, we'll start with the monthly charts. If we zoom in here, we can see that we've had 3 consecutively bullish months, and the long-term resistance line of 418.18 has finally been broken. This is a very, very strong bullish signal for the current month of June. And as we can see, although it hasn't closed yet, we can clearly see that the month of June is highly, highly bullish. Although we can't predict it yet, we can start to see that it is a highly bullish month. And we see from the RSI that it has started to go up, which is a confirmation. However, the moving average of the RSI is still going downwards due to this movement. However, it will turn upwards in due time, as we can see that it's already starting to tilt upwards a little bit. If this upward motion continues, then we should see a very, very good bullish turn and confirmation from the RSI as well. But that's all that we can gain from the monthly charts, which is that it is a bullish outlook for this month especially. Next, if we move to the weekly charts, here's where things get a little bit more interesting. And I'll explain the use of this chart for my prediction at the end of the video. Even in the weekly charts, we have seen a strong 3-week bullish pattern, a 4-week bullish rally, which is, again, very, very good. We broke the resistance. However, we can see that we are very, very close to the top end of the Bollinger Band. And I mentioned this in the previous video as well, that when the market rallies upwards so high and it reaches the top of the Bollinger Band, there is a good chance that the market can go back downwards. However, as for the current moment, we can see that it has broken the trend line and 2 resistance lines, which again is a very, very bullish confirmation. Then we had this kind of hammer candlestick, again, more bullish confirmation, and we have strong bullish candles so far. We have a dragonfly doji, then a sort of hammer, and then we have this candle here, which is also a spinning top candle. Now the problem with this candle, I'll explain when we get into the daily charts. But as for the weekly charts, we can see that the RSI is going upwards, not yet in the overbought zone, so we're in the clear, and the RSI is supporting the upward momentum that we're seeing in the weekly charts. And as mentioned again, let's move to the daily charts. And we can see for this week, we've had a very, very, very consolidatory kind of movement. Since we started off here, and now we've gone a few days where it hasn't broken a range. It hasn't broken any range, so we've had a consolidation. And the problem with that is it almost broke the zone, but then it hit that top of the Bollinger Band and went straight back down, forming this extremely, extremely strong doji candle, which is slightly towards the lower end and not exactly in the middle. So we can see that we have an immediate resistance point to look out for, which is the high of this candle, 431.99. Or more specifically, if you want a fluid resistance, we can take the top of the Bollinger Band. But as for now, we will take the high of this candle as the resistance to look out for, 431.99. Because the market was unable to break this high and rebounded downwards. And we've had a consolidation type market movement. So if we actually draw a line here, we can get to see what this market movement is. We can see that we've had a very, very strong consolidation. And the market is literally on the line at the moment. So obviously when this is clearly broken, and matter of fact, we can even move this a little bit downwards just to match it a bit better. So we actually have a sort of support line here to look out for. But we have to understand that the Bollinger Band is very, very close to the high of the market. And this week we have the Fed interest rate decision, along with FOMC statements and press conferences, which are as usual very, very determining for the market. Therefore, there is a very high volatility prediction for this week, in my opinion, and for most investors. So the news that comes out this week can heavily affect and sway the direction of the market. So for this reason, it's important to have a slightly larger trading range than the past weeks. So obviously we have this high as the resistance at 431.99. But we switch back to the weekly charts and we take the weekly low as the support to break for this time if the market is to go downwards, which is at 425.82. And this is because of the high volatility this week, which is expected due to the Fed interest rate decision, which can sway the market no matter how much technical analysis we do. So for this reason, it's important to take this into factor as well. And if we switch over to the Excel here, we can get a little bit more detailed into how this prediction is phrased. So we have a no trade yet. We wait for the specified candle breakout. Well, it's not specified candle. It's the weekly candles high and low, which is at 431.99 and 425.82 respectively, with a target of 1%, 0.5% on the last day, and a trailing stop loss. If the target or stop loss are not hit, given that a trade is triggered, then we take the closing price on Friday. The max Y from the monthly expiry is 420 CE at 72,525 for open interest, and 400 for PE at 148,114, which is unchanged from last week, and the monthly PCR is 1.93. The price action is an upward channel, which we saw in the charts, and we have the weekly trend is up and the monthly trend is also up. And this week we don't have a weekly max OI for the CE and PE because in this instance the monthly expiry is the weekly expiry, so we don't need it as for the moment, and the data isn't provided on bar chart. So here's the prediction for the week, and obviously as the events progress and if a trade is triggered, then I will add it to the sheet. But let's look at last week's trade. It was taken on the last day at entry price at 429.96, and we took a total of 235 lots. So we had a total margin risk of 101,040, and the exit price was 429.90. So we had our loss of 14 points, which is very, very minimal, and our closing balance is 101,220.79. So it is a very, very minimal change to our capital. But coming back to this week's prediction, if anything happens and a trade is triggered, obviously I'll fill in the Excel sheet and we'll cover it next week like this time. And if anything, any major events happen which have triggered a trade in the prediction, obviously a video will be recorded for that. But as of this moment, this is all, and I'll see you next week.